Tech Check, our Deirdre Bose is taking a look at the shift from disruptor to incumbent. Good morning, Dee.
Hey, good morning, Carl. So ChatGPT, yes, it changed the world, but it also awoke a giant. If year one was about magic and disruption, year three is about math and scale. It's a game that the incumbents like Google, they were built to win. Now, year one, let's call it the model era. The narrative was code red, ChatGPT as the Google killer. The moat was simple: who has the smartest chatbot? And the winner was the startup that could move fastest and break things. But look at year three. That has changed. Google isn't dead. It's approaching a $4 trillion market cap, and the moat has moved. Gemini 3 is widening the performance gap over GPT-5 in key areas. The moat is now the hardware, the cloud, the distribution to billions of users. Now, this high cost is also why the financing has changed. In the early days, innovation was funded by VC checks and optimism. Today, it is debt and capex. OpenAI's partners are piling up $100 billion in debt, while Google is spending from a cash-rich balance sheet. Now, of course, all of that industrial capital, it only matters if users are actually buying in. So the true validation of this trillion-dollar bet, it's user behavior. Look at this data from SimilarWeb. It shows a critical shift. While ChatGPT still dominates raw volume, the average user is now spending more minutes per session on Gemini. So that is a stickiness flip. It suggests that users aren't just searching anymore on Gemini. They're using AI for deeper work. Now, the momentum supports that. ChatGPT's mobile growth is flattening while Gemini's app usage is going vertical comparatively. Now, this also underscores, guys, the danger in the AI trade going forward. Investors, they have piled into Google as though this is a winner-take-all trade, while year three clearly signals that AI is behaving like a commodity. So instead of consolidating models, they're specializing and fragmenting. So year four is for the orchestrators. The lead is fleeting. The cost of intelligence is collapsing because open source models, often backed by Chinese labs, they're providing cheap, high performance alternatives. So 3 years later, guys, this is the reality check for OpenAI. Investors will have to judge whether that magic of year one can translate into monetization, and which will be required for a massive IPO as they plan.
Yeah, I mean, I feel like that DeepSeek moment is still ingrained in investors' minds, especially in technology, and we're wondering is there going to be a DeepSeek 2, or is that what we're going through when we hear some of these updates from China or from other competition?
I would say it's ingrained, but also, Sarah, somewhat dismissed. I mean, I hear a lot of people still pointing to, look at how overstated that DeepSeek moment was. Markets, NVIDIA, et cetera, have recovered, but it's actually just accelerated. Chinese open source models get better and better. They get cheaper. They get more efficient. So I think there is another shoe to drop. And I think you have to look around, what are developers, what are enterprises, what are they building on top of? And I think the answer that would surprise many people is that those open source models from China are gaining a lot of traction, not necessarily in the U.S., but all over the world. Coming back to that question, what do we want the world's AI to be built on? American AI or Chinese AI? That's going to be a big topic in the year ahead, too. Year four, we'll call it.
And Eric Schmidt has spoken recently about what he sees as millions of models underneath that sort of open source architecture. You know, we talk a lot about direct to consumer, but it's probably not a coincidence today, Dee, given your story, this partnership between OpenAI and Accenture trying to get this in front of people at the office.
Right. And it used to be, partner with OpenAI. That was like a year one and even a year two thing. And that sort of halo effect would bring up other companies saying that they're serious about AI. So this Accenture partnership, it's kind of a throwback to that other era where I think you're going to hear more and more in the future, maybe less partnerships announced, more sort of integration. That was sort of what the Google narrative has been about over the last few weeks, Meta potentially building with Google TPUs. You're going to need more than just a partnership, something to slap on your AI. It's going to be deeper than that, and that's what we'll see. But Accenture, it's up, 3%, so maybe still a little bit of that halo, but I think it's harder to come by.